CNBC has launched a financial education initiative called Invest in You, Ready, Set, Grow. It's all part of a new partnership we have with Acorns, the savings and investing app. With the Fed set to release its minutes later today, we're taking a look at what investors should be doing in an uncertain rate environment. Joining us now with her take is Lisa Shalett, Chief Investment Officer at Morgan Stanley Wealth Management. Good morning to you. Thanks for joining us. What should investors be doing in this uncertain rate environment?
Well, our key advice here is that, we're looking at an environment where we're likely to have an earnings recession over the next couple of quarters. And by that, we mean that many companies are going to see year-over-year negative comparisons in terms of their ability to grow their profits. Of course, remember that 2018, we were coming off the benefits of the tax cuts and fiscal stimulus. So earnings growth was, in many cases, up 20 to 25%. And so, we think that earnings are going to be tough to come by. And so our key advice to clients has been to focus on those companies that have stable growth trajectories, not high growth trajectories. So that would include things like healthcare and consumer staples. But also companies that have valuation support, like financials and like industrials. One of the things that we're observing is that, the U.S. economy, grew much faster than the rest of the world in 2018. We expect the U.S. economy to be slowing this year, but actually for the rest of the world to see better growth. And so those companies, like some of the industrials, that have exposure to global growth and a rebound in that growth, particularly coming out of China, to do well.
Okay, so that's the equity piece of this. In terms of bonds, how should investors be positioning themselves there, especially because I think bonds can be a little bit daunting, and we're in a period where the Fed is certainly more cautious in terms of its policy, but a lot of question marks ahead.
Yeah, there are a lot of question marks. And, the Fed, certainly has gone on pause, and that has helped contribute to what we call a very flat yield curve, or the difference between, rates that you can get in cash and rates that you can get for owning, longer term bonds. That spread today is very, very narrow. And so what we've encouraged clients to do is to not take long bond risk and prefer to stay at the shorter end of the curve and even increase their cash balances and just be aggressive at getting 2.5% yields in even things like certificates of deposit.
Lisa, is it time to bring back those classic ideas like rebalancing and diversification? I mean, it seems like investors did okay over the past several quarters if they were mainly in domestic stocks, but maybe haven't shifted things around because of that.
Yeah, no, look, I think that that's a fantastic observation. We believe deeply in the benefits for long-term investors of annual rebalancing and broad diversification. As you noted, really over the last decade, you haven't had to be particularly diversified. This has been a market where, passive index investing in U.S. stocks has pretty much, quote unquote, done the job. We think that now that we've entered a new regime with regard to both fiscal and monetary policy, with government spending now producing deficits and the Federal Reserve, normalizing policy, that, moving back towards those good health and hygiene type practices and building portfolios where you are very diversified, and that means including international stocks, emerging markets in your allocations, and rebalancing those allocations annually is absolutely critical.
Hey, Lisa, we pay a lot of attention to your call, especially the earnings recession call from Mike Wilson. He's been on the air quite a few times, as you know. When you think about upside risk to the market, though, where are you focusing? If, in fact, your thesis is not quite correct, where could it be wrong on the upside?
Yeah, well, look, we are, somewhat bearish about the outlook for corporate earnings. Certainly, if we get better than expected growth in the U.S. and, quite frankly, a rebound internationally, we could see earnings growth move back into the 5 to 7% range. I think one of the things we want to be careful about is how does the Fed respond to that? If in fact growth is much better in the second half of the year, will they be forced to raise rates? So look, I think from where we sit, it's all going to depend on the data. I think the upside is going to require a very patient Fed and better than expected growth. Just not clear that that's a combination that we're going to get.
Lisa Shalett, thank you for joining us today and for your insights on where investors should be considering putting their money right now. We should note that NBC Universal and Comcast Ventures are invested in Acorns. For even more financial education, head to the website cnbc.com/investinYou.